How's everybody doing? Hope we've all had a great weekend. This is 50 pips, 11th of November 2012, doing our usual weekend update. So let's see what we've got in store. I think we're gonna keep it. I'm gonna keep it brief this week, and let's just look at some key charts. Okay, so let's start with the ES. What's going on the ES? So if you guys remember what we'd been focused on the ES, we'd been focused on a level is a level. As long as it holds, it holds. So we were focused on buying these 1400s, looking for this 1400 to 1390 level to hold for continued moves back up into 1460s, 1420s range. And that worked for quite some time until towards the end of the week, we just got a complete breakout. What we said in last Sunday's I can't remember if it was a live update. I think it was a live webinar, if it was a recording. But anyways, what we said is be cautious. We would not recommend to get overtly bearish on a break below those 1390s. If we saw sharp acceleration because we had a very big level just below. So of course the break was an interesting trade, but we said we really have to be aware of the fact that these 1368s are a key level. Okay, those 1368s were the 50 back of the move from 1262 into those highs we had, and that's exactly where the market found bids. So going into this week, what I would expect is first of all, we'll have to see how we open tonight and how price behaves around these 1368. So are these lows going to hold? And if they hold here, I would expect the market to try and rotate back up into those 1390s, 1400. And that's going to be the key resistance zone where the shorts will want to come in and press this and keep pressure on. And as long as the rotation back up meets sellers in this previous support zone that now acts as resistance, look for the market to continue to try and take a stab at those 50 backs and continue this downtrend to tie and take out lower levels. Okay. However, if we break lower instead of going higher, if we break directly lower from these 1368s, same thing I said last week is I would not get overtly bearish at lows because we've got another key level which is going to come in at that 61.8, which is at those 1343s. So going into the week, what are the levels I'm watching? I would say 1400 to the upside and 1343 to the downside. What does this mean? This means that if we get a daily close below these 1343s, I would expect the market to trade with a very bearish, very heavy tone. And unless we can break below that, I think the pot odds or the chances are for us to get some buying opportunities for moves back up. Equally, if you're looking at this in terms of the short side, as long as the market is capped by these 1390s, 1400s, then I think it's going to be interesting to continue to try and play the short side. But should we break above that 1400, well, then I would expect the market to, especially into these 1420s potentially, so 20 handles to the upside, to move quite aggressively. So I think 1400 and 1343 are the big levels that the bears want to hold 1400 below, and the bulls definitely want to hold above 1343. So this level here we've just opened here is going to be pivotal, but don't forget that this is a very big level. If we hold, I would really not be surprised to see us rotate back up into these 1420s. Okay. Now, just briefly before Euro and cable, because a lot of people were asking me about, I got a bunch of emails about the Kiwi and Aussie. I really don't have that much to add on our levels in terms of Kiwi and Aussie. On Kiwi, it's still all about these lows, this whole support zone, right? And you see that buyers keep on buying and keep on supporting this level rather. So I think this whole zone, 8130s into 80s, 50s, is really a chop zone. For me to get overtly bearish or to look to be selling rallies or moves back up here, I need to see a daily close below 80.50, okay? And as long as price keeps on hovering above these 81.30s, I think the chances are for us to see the market trying to rotate and take another stab at those 82.40s, which we've talked about, and they've been a pivotal level for so long, and that will be a key decision point into the week, okay? Now, Aussie, what's going on Aussie? Very similar. We've got this bull bear line. We talked about this a lot, which are these 0380s, and that's exactly where we are. So don't forget that it's a tricky chart. It's not a very nice chart. I haven't been trading this very much at all. It's not a chart I particularly like, but I know a lot of people are interested in it. The way I'm looking at it, overall I'm still looking for us to try and print into 0490s or to come back into this double trend line zone. And so far, my view, as long as we keep on holding above these 0380s, and as long as any attempt to break below, you can see here, is met with buyers that and bids supporting this, I can't change my outlook. My outlook is still going to be for us to try and take a stab higher. Now, if we get a daily close below those 0380s, then I think we've got a good chance that we'll try and rotate lower and potentially to move all the way into those 0260s. But again, I think that would be a strong support. So my levels, equally to the way we talked about it on the ES, would be downside 0260s, upside 0490s. Okay. Now, Euro GPB. We looked at this the other week and we're saying caution on any move lower. We expect this to be a strong support and potentially a buying opportunity. So we're talking about these 80s being pivotal. So hold below 80. We were looking for a test of 79.50s, and hold above 80. We were looking for a test of 80.50s. Now we came back down. This channel caught a bid here. We didn't get a chance. I was looking to enter some longs at 79.50s. Didn't print at all. Well, I think we printed in the 50s, but I was really looking for that 50 to get tested. And right now you see that it looks like that low range, low support zone has been front run. So as long as we hold those lows, look for these 80s and look for the market to try and press back above these 80s. If we get a daily close above the 80s, I'll be looking at 80.50 to get tested. So structurally, from a bigger perspective, this is a quite nice hold of this bottom of the channel. So potentially we could be looking at rotation all the way back up into 81s. Interim, I think the fight is still between 80.50s, 80 and 79.50. So that's the chop range. You know, the guys who follow me on Twitter more actively know that it's just a chop range. We need to get either a hold below those 79.50s to start trading very bearish, or we need to see a hold above those 80.50s to see more bullish Momo. But overall, the chart to me still looks like, as long as those lows hold, I'm looking for price to try and rotate back up into those 81s. Okay. Now, CAD, and then we'll do Euro and Cable. We'll keep it short, tight, and sweet this week. CAD is interesting. What's happening on CAD? So we have two big levels that followers know I've been talking about a lot, and one is the parity mark, and the other one is the 98.50s. So as far as I'm concerned here, we still haven't got a decisive break above that parity mark. What's in play here is this very aggressive buying, these bids coming in at the 50 back of the move off 97.30s into that parity mark just above, and then you see very aggressive buying coming in right at the 50 back, pressing price back up into that parity mark. Now what that move is looking at, what those traders are likely looking at, is a hold above that parity and to try and continue into a 123 extension, which is at those 0080s, okay? So that's most likely the primary, what we call, at least the way we look at the market, the primary target for this move. However, what I wanted to to highlight are two things. First of all, again, caution around this parity. If unless we can really hold above, market could easily shift and turn back trading in with a bearish tone. And what I wanted to highlight is from a bigger term perspective, this bigger move from highs to lows, we're moving into this 50 back. Now, we traded this in the room to the short side as a front run of this 50 back. What's happening here, you see that offers are still coming in. So the only thing I wanted to point out, and again, because this is a weekly, so I need to try and give you guys an outlook that will likely be valid for the whole week. I would expect sellers to be defending this area. So either for this 50 back to be defended aggressively here, and if you can't see price breaking above this 50 back into the beginning of the week, again, I would not be surprised to see a move down and some more profit taking for another test of those lows and potentially that 98.50, number one. But equally, if we break higher, similar to how we discussed on the ES on these, I would not get aggressively bullish at highs here, because keep in mind that this is a very strong support zone. Okay, so going into the week, I think we're looking at this resistance zone. This resistance zone as being the top side and bottom side being those 98.50s. That's the way I would be looking at CAD. Okay. Let's do Euro and Cable. So Cable, what's going on Cable? Cable, we're pressing and we're hovering around these 59.00. This is a key level. You can look back on your chart and you can see that, aggressive resistance. Once we broke above it, we got this aggressive move down. Once we came back down, first touch, very aggressive support, bam. We came back down now, we got a front run here, and now we're actually breaking below. So as long as we hold below 159s, expect this to be trading with what people will call a bit of a heavy tone, and we could potentially see some weakness and a move back down into these 58.30s all the way into 58.00. However, if we go into the week and we start to trade back above 59, caution, because I would not be surprised to see us move back aggressively all the way into that 60 level. Okay, the way we're trading here, if we hold below 59.00, it's going to be trading with a heavy tone, but we have a lot of structural support to the downside. If we break back above those 59s, I think the 60s, the momentum to move back to 60s is going to be quicker than the momentum to move into 58s on pressure to the downside, if you see what I mean. The big... And again, in broader context for the week, going into the week, it's going to be those 60-40s high range and those 58s down range. So you see, the way I'm looking at it, I've got more room to move to the upside than the downside. So as long as we're trading heavy, I don't mind. And as we press down into those supports, I'd be looking at that as buying opportunities most likely. Keep in mind, again, that you have the 50 back of this most recent move from 152.60s into those 163s coming on just below that, and that's coming in at 157.80s. I would expect that the buying will come in ahead of that. I expect that level, if that level is going to hold for a rotation back higher, I would expect buyers to front run that, and I would expect them to come in the 58s or low 58s. And last but definitely not least, let's look at Euro. So Euro's been trading. I think it's been interesting, but the moves have been not too interesting in the way I'm looking at it, because it looks like we've just been triggering stops and then we're finding buyers, triggering stops and finding buyers. It hasn't seemed to be a good flow of momentum, at least in the way I look at the market. And here we're hovering at these 127.00s. Now, if you remember, since last Sunday on Twitter, I've been going on about the whole week pretty much like a broken record. It's all about the support zone, which was 127.50s into 127.00s. So as far as I'm concerned, even on a weekly, we held those 127.00. So we're hovering there. From a cyclical perspective, it's a very key, because if we start to hold and get heavy below those 127s, this is going to potentially accelerate to the downside, or at least the bears are going to be looking for this to accelerate to the downside very aggressively. And equally here, the bulls are going to be looking at a hold above 127s as potentially for this to have set a bottom and to rally all the way back up. Okay. One thing which I think is interesting, a way to look at this, is if you look at what's happened recently. So if we look at that move from 149s into those 126.20s, you see, once we came back up, we got sold off very aggressively. So what I would call a strong front run, aggressive sellers coming in well ahead of the 50 back. Okay. Now, I don't have this on my chart, but let's just put this on the chart. So if we just add 30%, 38% fib retracement here, you see what's happening. Very aggressive move down, and then aggressive selling is coming in on the retrace to keep this in trend, smack at the 38 retracement. And what happens here? This is a weekly again. We press back down all the way to print the 123 extension, what we would call a primary move, finished. Okay. Now, we extend the fib to the new low, and what's happening? Bam, where is the aggressive selling coming in? Right at that 38 once again. Okay, so that's why, and let me just get rid of that 38 because I don't like having it on my fibs. Okay, so you see that this is where I have these dotted twice. We've had very aggressive selling coming in at that 138. So that's most likely why you'll be seeing a lot of people who are looking this from a cyclical perspective are saying, okay, that's it. We've put in another major top for Euro, and they'll be calling for a move back down all the way to test those lows and lower. Now, what's interesting here is I think the actual action is not that clear cut, because we've got a double top set here, etc., etc. So what I'm looking at going into the week is that we have, if we look at the 50 back of that most recent move up, that's coming in at 160.00. So I suspect the big fight this week is going to be on hold above or below 27.00, but I expect on any press lower, buyers to come in, and most likely for the buyers to come in on any move into 26.50s to 26.00s. So I think that the bulls, they've most likely engaged here, but they will not give out the current. So the current guys who are buying 27.00s are not going to give up on the bullish outlook, on the fact that we're setting a bottom, unless price will close on a daily basis below that 26. Because as this week we've been talking about 27.50 to 27.00, I think this week it's shifting to 26.50, 26.00. Equally, what the bears are going to be looking at to keep pressure on is most likely these weekly highs. Okay, and what were those weekly highs? Those weekly highs were coming in at 28.70s. So to make this easy with numbers, I'm going to call it 2900 and 2850s. So in terms of flows and momentum for the week, the way I would look at this is do not expect the bulls to give up unless that 2600 to 2650 support breaks aggressively. And equally, do not expect the bears to give up unless price moves back above those 129s. And that's where I would expect the biggest amount of stops to be layered, both to the upside and the downside. And that's where I would expect to see a lot more momentum coming into the market. So that means that if we're moving down and we break below 2600s, then I think we could get sharp acceleration to the downside. Equally, all these guys that have been sitting short most likely are trailing their stops, and they're probably around that high 28, 29. So if we break that level, then I would not be surprised to see sharp acceleration to the upside. So those are the levels I would. It's still choppy, it's tricky. We've got a lot of news flow coming out, we've got a lot of data coming out, so be cautious. But I think the 27s are important, but the broader support and resistance are not quite there. They're just a bit outside. Okay, so I hope that was useful. I wish you guys a great trading week. I'll upload this. I don't know how long it's going to try to get to upload, so it might be uploaded tonight. Maximum will be uploaded before the start of London tomorrow morning. Have a great end of Sunday. Keep it tight. Take care, and talk to you guys soon. Have a great one. Bye-bye.